Kush Bora and Parag Thakkar join us as they do every Monday. Gentlemen, both of you, thank you so much for taking the time out. Kush, I'd like to start off with you. This dip and maybe some extension of that dip, is that an opportunity to buy because the market respected that 24,800 very well on Friday?
It might be, but it's not a very strong one.
Okay.
But just before that, how was your weekend, guys?
Mine was fab.
Slightly working, but good.
How about you?
I was not well, but it's okay. Now recovered.
Basically, Coach, you want to talk about your weekend.
Of course, I do.
Why don't you talk about your weekend?
No, so mine was mixed. See, the cricket season started, which was fab, but we lost the first warm-up match, which wasn't. So it was like a mixed bag of emotions, you know, much like a mixed tape, which brings out, mixed feelings. So any idea about how my readings on the market are right now?
Okay, do we get
fairly
a prize
mixed?
to guess?
Fairly mixed. See, market is sending out mixed signals right now. If you look at the last couple of days, it might seem like, what a brilliant rally we've had. But just put it in context of 2 weeks. This is more of a rebound rally. Despite that, we're right now in that middle of that 24,800 or 25,000 resistance zone that I call it, and hence you're not seeing a very clear run-up. Hence, when Neeraj asked me, this dip, is it a buying opportunity? I still maintain the view that you have to buy only for rebound trades and maybe for intraday or a day or two. This is not a positional long kind of a market. That happens once we close firmly above 25,000. Again, on mixed signals, if you look at the data independently for Nifty futures and Bank Nifty futures, there's a long build-up with an OI jump of about 5%, Bank Nifty with an OI jump of about 3%, right? But the overall picture on index futures is still short. FIIs are closing in on the 2 lakh contract net short, so which is a big thing. 93% record short still maintained. So all in all, while it might seem like we've had 2 good days, and which we've had, this is still not a zone where you want to go out and buy very clearly. Minor dips towards 24,800 could be bought because now you play for that range of 24,800 to 25,000. But that's about it. Any strong long positions on the index, at least Nifty, should be considered above 25,000. Bank Nifty, still your index to go long with 56,000 and higher levels on the cards.
We'll circle back on a few of those names, but in individual stocks that you're looking at this morning?
Sure, Alex. So Monday we speak about the weekly pick. This week it's Schaeffler. The stock has done very well in the last 4 sessions out of the 5. Volume pickup, very interesting. Friday, it closed near the high point of the day on the back of good volumes. So yes, with this momentum continuing, for targets of 4,500 and 4,700, you go long. 4,100, you place that stop loss. The second one is again from the cash segment, and this is GE Vernova TND, GV TND. This is a call that we had initiated some time back for second target of about 3,150. That's been hit comfortably. Stock still gaining ground. So for targets now, revised targets rather, of 3,250 and 3,330, and a stop loss around the 3,075 mark. GE Vernova TND still a long bet.
Is there a level on the Bank Nifty that you can look? I think you're mixed on the Bank Nifty or more positive?
Definitely more constructive on Bank Nifty. Even on Friday.
Is there a buy at these levels, or what would you look at?
Yeah, Bank Nifty is a buy even at these levels. Immediate target 55,800, but a more convincing long trade or other positional target will be above 56,000. So if you want to go long, any pullback you should take as an opportunity to go long on Bank Nifty. So 55,800, 56,000 immediate targets.
Yeah, and of course one of the big triggers is banking updates. Parag bhai, how have you been looking at all of the business updates that are coming in?
I am very happy, very happy.
Look at that smile, lovely.
Luckily, as we spoke last time also, that after booking profits in cement and some auto names also, I shifted to financials as a second order thinking that after the GST cut, if there is a demand-led surge, then credit growth will also revive. And so I stuck to only those banks where I am sure of the asset quality. So whether it is ICICI, HDFC or SBIs of the world or BOBs and PNBs of the world. And I am very happy to see that HDFC Bank QOQ 4.4% loan book growth, YOY 9.9% loan book growth, which is closer to the system level growth. And they had said that, right, that in FY26, their loan book growth will be equal to system, and FY27 they will outpace it. Because now, see, RBI governor is also very pro-growth. So it is not so much of restriction about CD ratio. So now that CD ratio, if you see this update, the CD ratio has again got back to 98.8%. But that's okay, that's fine. And that will cushion their margins also. So in my view, HD, of course, as you rightly said, Kotak and BOB also came out with superb business updates. So already the trend has started. What I was expecting from Q3 has actually started happening in Q2. So that is good for us. We have a very large position in financials right now. We are above Nifty weight in financials in our portfolio.
Your favorite HDFC Bank has also done pretty decent.
Yeah, and see, basically I trust them blindly. So so whatever they do, they'll do in a right spirit, wherever risk reward matches, right, whatever is good for minority shareholders. And that is what they have done in this quarter. That when they saw the opportunity to lend, like for example, last time we discussed, like only Maruti, if Maruti sales are going up, HDFC Bank is there everywhere to lend to Maruti customer, borrower, right? So HDFC Bank will also benefit. So they saw the opportunity and they lended, right? And this will accelerate further in the festive season.
Okay, but very quickly, Parag, very quickly. So who is the winner from amongst the 10, 12 names that came out from an update, purely from this perspective?
If you see optically...
RBL, PNB, BOB, Kotak, HDFC.
Yeah. So see, I'll tell you, the growth leadership wise, you can say BOB was a growth leader. The 6% growth, like QOQ. But that was on a soft Q1. Right? So if you again compile with H1 together, then it is okay, then it averaged out. From NIM perspective, I am saying that resilience-wise, I feel that PNB, RBL, those kind of names will be more resilient. And City Union Bank, as I keep saying, they have not given business update, but I am saying because of their gold loan book exposure, the NIM compression will be minimal. In HDFC Bank kind of name, I am expecting 5 to 9 bips kind of NIM compression, or ICICI also for that matter.
Wondering, Parag, what you're making of some of the retail updates which came in over the last couple of days, including Avenue. Now, one way of looking at it is GST change was going to cause some turbulence. Would you give that kind of a benefit of doubt?
I think in essentials, to give, for example, we saw a huge surge in small car sales, right? Or some two-wheeler sales. That kind of thing you cannot expect in essentials, right? So there is no as such pent-up demand for it, right? People were anyways consuming it. So in my view, the update which came from, I think those two, of course, I don't own them in the portfolio. So those V2 Retail and V-Mart, right? The updates from those two companies were very good. Avenue on this large base, I think, was not able to perform that well. So my view is that here you cannot see a big benefit of the GST cut. It is things as usual. Just it is putting some more disposable money in the hands of middle class, so they can consume little bit more. But it is not like small car of Maruti or Hyundai.
No, but the idea is that you will maybe buy a better brand of soap or a better brand, a higher margin brand of rice or whatever it is.
To that extent, FMCG or these retailers will benefit to a little extent. But I would say that the major jump will be in discretionary things. Like auto, in small car sales which can happen during festive in white goods also.
Would you say that this 15% revenue growth that you saw for Avenue in the second quarter, a lot of people had expected 20%, but you say that the second order impact, maybe third or fourth quarter, you might see an uptick for Avenue?
Maybe. I'm not very sure. I have not done my, because anyway the stock is very expensive.
Yeah.
So, and see, in my, like I've said many times about this EMS space also, when you pay 80 times, you are buying for 100 rupees, you are buying 1.2 rupees per share profit. And so that means you are actually expecting this company to grow at 50% CAGR for years and years together. It is not, at least in my circle of competence, that I can predict 10 years growth of 50% for any company of such large base.
Yeah.
See, HDFC Bank is 15P, 15% growth. That falls into my circle of competence.
Very large IPO opens today. Tata Capital, northwards of 15,000 crore rupees will be raised by this company. You're going to see maybe some liquidity getting sucked out of the market. Banking stocks are going to be in focus. BFSI updates have largely been positive. Bit of a mixed bag when it comes to retail, and individual stock picking will rule the roost. That's what we're hoping to get you here. Just as markets are set to open, Kush Bora and Parag Thakkar continue to be with us on the show. Parag bhai, since we've been talking about this consumption story and banks as an outcome of it, what are the other spaces that this can extend to? How are you looking at real estate? Sobha had pretty decent business updates coming in, and with business updates, I always say it's like the trailer of a movie.
Yeah,
the trailer,
it is actually half picture.
It is half
because,
picture.
Because see, in banks also, for example, you don't know NIM, you don't know asset quality in the business update, right?
We don't know. And the thing with trailer is, anyone who edits a trailer, all the best bits are in it. Then ho sakta hai puri picture itni achhi na ho. So that disclaimer is there.
Yeah, correct. So basically, in real estate, what we have seen is last 3 quarters were dull. From all perspectives, and that's what was reflected in stocks also, right? For example, we also own DLF and Oberoi Realty, and they have not performed as per my expectation in the portfolio, because the things on the ground have been dull. So let's see now how this festive season goes. Of course, the industry veterans will be positive that Diwali sales, and Diwali, this particular period is 35% of the overall sales for real estate guys also. So festive season is going to be very important. Let's see. I am also hoping that it should be good, but for that matter, I hold only these 2 stocks, Oberoi and DLF, in the portfolio. And the main reason for holding this stock is the rental income. DLF has a 6,000 crore rental income business where they hold 66% stake, and Oberoi also has a large rental income. With this Borivali mall starting, I think their rental income can go to 1,500 crores.
Would you not extend that to a Phoenix Mills?
Yeah, sure. So Phoenix Mill is also a part of that, and that also benefits from consumption boom.
And not quite reflected. Any of these that are on your radar?
Not really, I'm afraid not, because the price action just hasn't been convincing enough. In fact, if you've seen the selling pressure, despite the kind of falls that they've had in the last 3 to 4 months, still is on the back of good volumes. The short covering isn't as sharp as you've had in some of the other sectors. So this is more of a wait and watch kind of an approach. I wouldn't say even now, you go out and accumulate. I want some more confirmation of price action to be a little more constructive on the sector.
Well, while we're talking about Sobha, as you know, because we talked about their business updates, like I said, were pretty decent. The Sobha business updates pretty decent. We talked about you कि trailer hai, पूरी picture नहीं है. Nevertheless, market never waits for the end credits to roll, right? The game is to figure it out right at the start. Tata Investment, we talked about that mega, massive, giant IPO. Tata Investment seems to have, perked up and was showing that kind of a move last week. I'm seeing a rate of 4.5% up on a Tata Investment, but of course fluctuating in the early hours. Kim's doing well. Look out for hospitals. Max Health doing well, and this is an important one. The central government rates, and we'll get Varsha for more on that story, but here's what's happened. The central government rates for procedures have been announced, and there's actually an increase in some of these rates. So you're going to see hospital companies in focus. The package rates have been revised by the government under the CGHS scheme for 2,000 procedures. For the first time in 15 years, the new rates are effective from October 13th. Yatharth, Fortis, Max, Narayana Health, HCG. Look at some of these companies this morning as well. This covers medical and surgical procedures, diagnostics and treatments. Of course, benefits central government employees, pensioners and dependents. But the hike in prices is 25 to 30%. And anyway, hospitals is one space which, and the whole space is something that even a lot of global investors are very, very positive on. When we talk about discretionary expenditure and more money in the pockets, people also tend to spend on more diagnostics and more on their health. Parag bhai.
So basically, according to me, this is a structural space to be in, no doubt about it. I'm just worried about valuations as usual. Otherwise, yeah.
You say it like it's a bad thing. It's okay. It's not a bad thing.
It's okay. See, basically, it doesn't fit into my framework as of now, because I have seen, when this Narayana Hrudayalaya got listed and all, the prices were too low. And now they have gone up too much, even all diagnostic centers, because these are structural things. As Tamanna rightly said, this is a lifestyle thing and structural
so you're saying that
thing.
The hospitals are expensive right now?
Yeah, I would say so. I would wait for some declines.
Okay. Do you want to go into the numbers as to what you think? You might have something on your radar, for example, to say an Apollo or a Fortis or one of these.
Definitely. All good like Apollo or Narayana Hrudayalaya, those kind of things are on our radar, but we have not yet bought them.
Okay, fair enough.
The thing with hospitals, according to me, is that for an Apollo trading at trailing 70 earnings, Fortis trading at trailing 80 earnings, Yatharth at trailing 50 earnings, you are not seeing the earnings growth the way you would in the consumption and space, and the return ratio metrics are very different than what an
fixed asset heavy business.
It's a fixed asset heavy business. So therefore, yes, they have gotten this because in this whole wake of it being a structurally strong story and almost an indispensable part of your spend that you get these. But at some point of time then, the gains in the stock prices will be subject to only the earnings growth, subject to valuations not coming off. The valuation re-rating game is now over in these companies, and which is why maybe people want to be a bit careful here. The question though, Parag Bhai, is that there is an immediacy to this thing, right? If there is a, as Tamanna was saying, if there is a pop in the rates, then for the same multiples, there is an earnings growth out here, right? So, if that doesn't enthuse you at all.
Which has happened today, which you were highlighting.
But that doesn't enthuse you.
So definitely we need to work upon it. And as you were pointing out, that these companies have this percentage of ratio of government, and so they will benefit EBITDA. So that calculation we need to do, and we'll figure out what to do in that space.
Kush, any trading here very quickly? Any Yatharth, Fortis, Apollo, anything?
Incidentally, the first two names that you mentioned,
Yatharth
and Fortis, both have done well. Yatharth, in fact, has had a profit booking dip and close to the support level. So this one could move towards 800 and higher levels. A positional stop near the 720 mark where it made the recent low. So very good move. Fortis also very similar structures.
Got it. Okay, so we've talked about a few of these names. We will circle back to that, assuming that some of these rates would settle over the course of the next 3 minutes. But let's go to the big brokerage call of the day. It's 9:05, and the call that we've selected, or Somit rather has selected, is HSBC, which has maintained a buy on Varun Beverages. And Somit is joining you to tell you about what they're saying. Stock is not doing anything as of now. What is HSBC saying though, Somit?
45% upside is what HSBC is seeing when it comes to Varun Beverages. They have maintained their buy rating with a target price of 640, which suggests a return potential of 45% from the current levels. Now, the brokerage is seeing two key catalysts for Varun Beverages going forward. First is what is happening with Pepsi in the US, and second is the GST rate cut that we have seen. Now, the brokerage believes that given the current activist pressure on Pepsi company to reform its franchise model, it sees Varun Beverage as has an opportunity to take over this franchise model of Pepsi. Now, if at all that happens, then Varun Beverage gets access to capital in a developed market, a low-cost capital in developed market, and this can be used by the company to fund growth in developing markets going forward, which will be a big positive point for Varun Beverages going forward. Along with this, when it comes to GST rate cut, the impact is marginally positive for Varun Beverages because nearly 30% of its volume gets benefit out of this GST rate cut, which contribute nearly 19% to the top line. Now, when it comes to the September ended volume, it says that that is uneventful given that it's seasonally a weak quarter, but the setup is quite strong for a strong growth on volume number going forward. Also, it says that favorable input cost along with benefits of backward integration should drive healthy margins and profitability for Varun Beverages. And lastly, it believes that the changing competitive landscape is also quite positive for the industry growth. So based on all these factors, the brokerage is quite bullish and it sees a 45% upside on the target price for Varun Beverages.
All right. Thanks a lot for that. So keep an eye out for Varun Beverages as well. I wonder if the note can bring about a reaction, and that reaction could be worthy enough for a trade, Kushpora.
Becho. Every level Varun Beverages has seen a rise in the last about 2.5 months, has been taken as an opportunity to sell. There was a time when there was a massive volume jump up and the stock bumped up. 200-day moving average ke aaspaas bhi nahi aaya. So, you've got these selling pressures that come in. While, yes, HSBC has their reasons, the price action right now is not suggesting, a buy. So, I would wait and watch, and then at slightly higher levels of 465, 470, once that is taken out, you might see some sort of a steam come in. Right now, it's a sell on rise kind of a structure.
We were building into a negative start, and of course, just about 6.5 minutes for the market open. The pre-open rates have settled though. Where does the benchmark settle? Let's pull that up. It's in the green just about. And the reason perhaps for that is HDFC Bank and the way that it's moving. Of course, it's off the high point that was indicated in the early few ticks, but it settled, I think, with gains of what, 1% or so in the pre-open session. Any opportunity there, Kush?
So, Alex, HDFC for a long time and even now continues to be a positional investment kind of an idea. The momentum is missing. It's gradually inching up. Every time you get a dip towards the 925, 930 zone, you go out and accumulate some more. That's the kind of setup. So, I wouldn't trade HDFC Bank, but at these lower levels, and you've got the upper band which is close to 1000, 1025. So this seems like a good entry point. So I would accumulate HDFC Bank on declines, but it wouldn't be a momentum play.
As the pre-open session has closed, it's banks all the way, Nifty IT doing nothing, and the Nifty and Sensex mildly in the red. It's all about banks, and we've been telling you since this morning that that's going to be the kind of story that plays out. Sobha looks like it can open with an opening pop as well, or a bit of a gap up. There's a 61% jump in its total sales value for the year that they've reported in their business updates. Kim's is doing well, Max Health is doing well, so hospital stocks we talked about. Keep an eye for Vodafone. The Supreme Court hearing is today, where they are looking at various angles of how to reduce their AGR dues. That's the long and short of it without getting into all the legalese of it. But what the government is seeming to say in court so far is quite constructive. Like, the government also wants to find a solution. Obviously, they're a large owner of Vodafone Idea as well. Watch out for that. Brigade Enterprise doing well. Apollo Hospital, Fortis Health. It's all about hospitals this morning, and this is something that we talked to you about a few minutes ago as well. So these are some of the ones moving. On the losing side, Mankind Pharma, a Lupin, we talked about that note from the US FDA, which is going to hurt. But I want to ask about a Bajaj Finance. Parag Bhai, Kush, would any of you buy a Bajaj Finance right now? Has been quite an underperformer, and the business updates are not quite bad.
Yeah, business update is not bad. The loan book growth is good. We'll have to see on the asset quality side.
So you'd wait and watch. You'd not jump in basis.
Yeah, I'm not jumping in buying. I'm buying. See, my view is very clear that we are in a recovery mode in terms of economy, right? So we cannot be over aggressive in terms of overpaying for stock or buying a very risky stock in terms of the company which lends to very risky segments. For example, some people might have betted on microfinance and they might have benefited. But I am not still in that framework of mind. My mind is still working on gradual recovery, and so you participate in a proven stable franchise like HDFC Bank, ICICI Banks and SBIs of the world. So
I have a small follow-up. The same logic extends to Bajaj Finance as well. If people are going to buy Maruti, then they can take loans from...
definitely.
So
but
on
Bajaj
that
Finance
parameter...
trades at 4 times price to book, HDFC trades at 2 times price to book.
Okay.
So there lies the
valuation picture.
So the valuation on the charts, Bajaj Finance?
So, see, it takes a lot to make an elephant like Bajaj Finance dance, right? A massive underperformance for 3-4 years. You've had a good spurt this year. I think now it's again going into that consolidation mode. So, like HDFC, I would go out and accumulate this, but I wouldn't play this for the momentum bit. One stock that we've identified in this space, which is doing well and pops up, on our radar after a very long time, is Poonawalla Fincorp. Good volume accumulation, good breakout. I think, higher levels of 540, 550 also very much on the card. So I would play some of these other names. Bajaj Finance is a more of an investment bet.
Same group, but Bajaj Group, Bajaj Housing Finance. You saw the update, 30+% gross loans.
Business update is excellent.
Yeah, but then it's not moved anywhere. Again, it's a valuation picture.
As Dheeraj was saying before we joined on the show, see, price is 112, right? And the trailing book value is 24 rupees.
Right.
Right. The last quarter EPS was 0.7. So I think the stock is very good, excellent. The only thing is that it's more or less priced in.
Okay, so you're not buying that basically.
So yeah, but I might consider, definitely I might consider on a bad day, or if I see say for example a quarterly EPS of 1 rupee and it becomes a 28 PE stock at a same price also 112, then also I can consider buy. It's a high quality franchise, I want to buy it.
Okay, and in the housing finance space, HDFC Bank of course pretty much the largest book, but beyond that, anything that you're looking at specifically as a housing finance play?
No, so basically housing finance stocks are good, Aadhar is good. If you see on the affordable housing side, Aadhar is always good. We have already invested in the past also in that company. LIC Housing always remains a very cheap, very, very cheap stock, I would say. The moment they deliver some little bit better numbers or they surprise the market on the positive side, that can give you very good returns. It's a very good segment to be in my view. It's a safest segment to lend, of course.
Yeah.
And now the competition is not that intense.
I just want to quickly talk about FSN if we can. They, I think late last evening, put out their business updates where they're expecting a consolidated GMV growth close to their 30s. Basically, growth is expected to be more robust than the mid-20s seen in the last few quarters. Let's see how the stock actually opens. But if you're taking that discretionary spend move forward, festive season, etc., would you look at some of these online platform players?
Sure, we will look at it. The only thing is that, see, this GOVs and NSVs and all this jargons, I would say, these are good. I would like to see what is the EBITDA growth, what is the profit growth, and what is the cash profit growth.
Words out of my mouth. Forget about the jargon, let's show profitability.
Let us understand what it means. Gross merchandise value, I'll try. Net sales value, I'll try.
Truth bombs this morning from Parag Bhai.
But Kush, I'll come to you on Tata Investment specifically. Any momentum to play here?
Alex, it's just been momentum, and I think it was Friday or Thursday when we discussed that the rally is now overdone, Wednesday or Friday, I suppose. When we said the rally is overdone, you have to book profits now. You might not want to give up the entire quantity that you hold just to ride the upside that, if any is left. But otherwise, I don't think this is a buy even now. The stock hit a high of, what, about 11,800 odd, and, has corrected since. Still overheated. If you have, you should hold with a trailing stop loss around the 9,500 mark. Don't initiate fresh positions.
Okay. Well, clearly the ones which are the stock of town, of course, and are hospital names, and we spoke about them earlier. But very quickly, Parag Bhai, before we thank you, what else aside of banks, etc., that has stood out for you in the last few days in terms of quarterly updates?
No, I feel that one of the things which was forgotten after this GST cut, and of course I also focused on the beneficiaries of GST cuts like auto and auto ancillaries, and of course second order thinking financials. The third order thinking is of course capex driven stocks. So we all, because the entire government focus shifted towards consumption, many investors started thinking that, the capex will be now ignored and all that. But I think from what I'm hearing from government in last 10-15 days, I think the focus on capex is very much on. So anything like L&Ts of the world, or the stocks like we have discussed earlier, LG equipment kind of stocks, those kind of stocks also can make a comeback. Of course, this tariff situation, not from L&T's perspective, but some of the export. For example, this LG equipment, 25% of the business is US exports. That is dependent on that US tariff resolution. But otherwise, I would say that industrial and capital goods is another sector which can be looked at, because consumption will fuel it.
Okay. Got it. We have to rush through, but Kush Bura, very quickly, 15 seconds. Any stock on your radar?
Poonawalla FinCorp, in that Bajaj Finance discussion, we mentioned that rather than Bajaj Finance, Poonawalla is the stock to go 540, 550 targets. That's been hit. Continue to hold.
Got it. Gentlemen, thanks so much as always for taking the time, for speaking to us. They've given you a lot of ideas about what you should do with your portfolio.